Hello, everyone, and I hope that you're well. More importantly, I hope that you had a great weekend. So, in this video, we're going to go over the trade breakdown. This is the trade that I took on Friday. Now, Friday was the first live trade I took using this new model. Now, I haven't really confirmed the name for it, but I think I'm going to call it Disruption purely because of the process that it takes. It's literally a disruption of structure or order flow, and that's what it's based on. The only thing I want to raise is that you have to understand that the reason why I posted it is purely because I want you guys to see what I'm currently working on. And the main reason why I'm looking to improve the model is purely because, one, I'm always looking to uh, improve and better myself, as to be honest, as we all should do anyway. And two, inception can sometimes be a little bit stressful, and that's the sole reason why I only trade 2 hours, 2 hours a day, purely because I can only maintain that level of concentration for those 2 hours. And with inception, if there is something off in your mentality, or there's something off on that day, or you're not feeling too well, you can easily make a mistake. I mean, it's the same with any model that you use, but inception can be so intense that you need to make sure that you are 100%. Otherwise, you are going to take losses. And the only way that I am able to confidently say this is purely because a lot of my losses have been down to, well, not a lot of them, but say that some of my losses have been down to the fact that I wasn't 100% that day anyway. And sometimes I'm just taking trades for the just for the sake of giving you guys content, because a lot of you guys try and trade every single day. I personally don't want to. I personally don't feel like I need to. Well, I don't need to anyway. But yeah, I just do it for the sake of you guys, to be honest. And that's what I've noticed in my own trading. Sometimes trying to force a position, for example. Um, so that's the whole idea about why I tried to introduce this model. Now, I think the main reason why I want, or also the one of the biggest reasons why I wanted to show this, because I think there is a lack of initiative in the Discord, and what I mean by that is, and this is not against everyone, but what I mean by that is, uh, there's a high dependency on myself and James to start confirming your trades, which, to be honest, I'm not here to do that. I mean, I can die tomorrow, and some of you guys that are relying on me. What are you gonna do? If I don't wake up, what are you gonna do? And I mentioned this. I mentioned this last year. And obviously, because at the start of the year, I didn't have a great prognosis. I wasn't. I was told, I only had 9 months, but obviously I surpassed it. I'm fine. But what would have happened if obviously I'm not here and you guys are still relying on me? And I think this video will also give you an idea about the thought process that goes into developing a model, and it's all how a rule-based strategy is actually developed. It's all based on stats, and it's all based on frequency. And it does take some time to develop, but I think the limiting factor is time for a lot of you. That because it takes so much time, so much of your personal time, a lot of you want to trade right now and take profit right now. It's not going to happen like that if you don't give it time, which is obviously not the best. Which is obviously it's not ideal for a lot of us, because a lot of us trade to make money, and some of us are trading at a point of our lives where we, especially when I started, I desperately needed it, because I was still a uni student at the time. Um, but I think what we need to understand is it's not going to be easy, and we need to make sure we have some sort of backup plan, or we're doing something to keep us financially stable. And this will take away the pressure that some of you put on yourselves, purely because you expect trading to work for you. Sometimes it doesn't work straight away. It may take 1 year, 2 year, or just a few months. It varies in individuals, and I think the worst thing is that social media can make it out like it's so easy to perform and so easy to whack out 10, 20, 30, 40%. And I think the hardest part is obviously when you're watching the course, and when you're watching my trade breakdowns, or even James's one. They make it look so easy. Well, we make it look so easy, but we have to bear in mind how long we have been doing this. And I think the main confidence comes from the fact that I developed this. I developed the rules. I developed the model. I developed all of this, and I've tested and built the stats around this. I've done all this, so I have that confidence and I have that trust in myself that this model works for me, and I'm happy to confidently execute, right, with no questions. And even though the testing is done for you, the reason why I say to go back test, forward test as much as possible, purely because you need to develop that confidence yourself, and you only get that through repetition. And also that process of repetition also improves your decision making speed, your execution, your thought process. It improves all of that, but is often neglected because we think the testing is done for us. Why do we need to test it further? We can just go live with this. If you want to go live with it, by all means, go ahead. But if you start feeling like you're lacking in confidence, there's a clear reason why. And that's something that you guys need to understand yourselves. I can't say that for you. I can't give you that. But anyway, something that ever since I posted that, some of you guys even sent me journals of losing trades saying that this model doesn't work. I stated very clearly that this is something I'm tested. I back tested for the last few months. I haven't even taught you guys this model. I don't know what some of you guys are back testing. I would appreciate if you don't hassle me about this model until I've finally released it. I know hassle probably sounds a bit rude, but you have to bear in mind I am just one person and I am still testing it. Please understand that, and please respect my boundary there. I'm still testing. If you want to trade this live, if you want to go ahead and test it yourself, by all means go ahead, but you do understand that I have not finalized anything, and the only reason why I'm posted it and the only reason why I'm posting this video is purely because I want you guys to understand how this thought process begins, and why certain decisions are being made. I'm not saying that this model is going to be any better than Inception. To be honest, I only back tested 1 month, and the statistics have been pretty much the same. And bear in mind, it's only based on my timings between 7 and 9. And the only reason why I'm testing that is because that's the only time I trade. I don't need to test any other time, purely because I don't trade any other time and I don't want to. I'm really enjoying trading those first 2 hours and being done for the day, or sometimes even done for the week. But again, if you want to go ahead and test this, by all means go ahead. But if you start taking losses and if you start taking losses from this, or you know what I mean, you need to understand that I've not completed this and I'm still testing. So we're going to be in the same boat in that position. What I suggest doing is just testing on a demo, or just back testing it from what you gain from this video. But what I suggest is that stay away from live trading. Leave that to me. I'm the one who should be making the mistakes for you. That's the whole point of me doing this, and hopefully this becomes an easier execution model, and that's what I want myself. I don't want Inception. I don't think anything can beat Inception, to be honest, but it can be so stressful. I want something a little less stressful that still has logical sense behind it. Right, so I've waffled for a fair bit, so I'll give you a breakdown of the understanding about it. I won't go into too much detail because, as I said, I want you guys to refrain from. I don't want to be accountable for anyone's losses. I don't want you guys to start using this and start blaming me. You have to understand that this is still testing, and the reason why I keep repeating this because of the comments and the DMs I got this weekend. To be honest, some of them have been quite hurtful, but I will just move on and look past it. I don't appreciate it, but it is what it is, I suppose. Anyway, so let's understand what the disruption model is about. So the idea about disruption is the fact that structure is being taken out. That's the idea. Now, I think often what you'll see is that when highs and lows are being taken. You see this as liquidity. Now, often what you see online is, let me get rid of this. Often what you will see is, you'll see this range being formed. People will draw this as liquidity, and they wouldn't even mark this as a POI. Say for example, if you're broke, okay. Well, often what you see on social media, and these are all TradingView bar replays, where they'll mark this as liquidity, price conveniently goes and breaks and reacts off the extreme, right? That's all done by hindsight, right? But the problem is you can't judge that in live. You can't judge that this is going to be taken out as liquidity. But the reason why I've started paying attention to this, because most of my losses, and this is how you develop a model, is understand where your losses are taking place and what's actually causing it. A lot of my losses were in the entry time frame, so my 1 second. I would be taking an entry from the SR, right? Say for example we have our 2 rules and there's no order flow there. I would be placing an entry at the SR and the IM. Price would take out the SR and react off the IM, and more often than not, these trades bang, these trades fly, purely because of what's considered as the liquidity play. But I highly doubt that that's the actual process, because the idea of liquidity being institutions manipulating price on the seconds time frame is ridiculous. I highly doubt that is the case. But from a mechanical point of view, that is something that I've noticed from a statistic. From a mechanical point of view, it's something that I've noticed happens time and time again. And this is how a rule-based system is created. You need to think about frequency of certain things that are happening time and time again, and then you develop stats on top of it, right? Based on what you see. So the idea was that we need to have some sort of structure to be violated, and then we look to enter off that. Now this idea of entering off the disruption, right, it's the exact same thing as how you would enter on your confirmation model. So there's no inception, it's a confirmation entry, right? But it's based off structure failing. Now the only thing that I've noticed compared to inception is that this happens less often, but when they do happen, it's very high probability. So you only need a couple of these. You only need a couple of these a month. I mean, so the month backtesting I had, so in what month was it? It was June. I tested. Sorry. So in the June testing that I did, there was only hold on, let me find them. There was 7 trades in that month. Now, for some of you that may be way too little, but in those 7 trades, 2 lost. Where's the rest of it? 2 lost, and the rest will obviously break even and wins, but I can't find where the rest of it was. And as a minimum, they all reached 10R. The only reason why I said that as a minimum is because in terms of targeting, it's very hard to judge when you're backtesting, because I don't know how I would react and how I would target price at that given time. It's very hard to give an accurate representation. I just want to know, does it meet my minimum partial point or not? Because I know for a fact that I know for a fact that I will take out a partial at that point. Apart from that, I don't know how far these actually went in terms of whether they turned to swings or not, because as I said, it's very hard to determine. It's very easy to mark out a 1 to 500 saying that I potentially would have held this. Anyway, so in terms of the idea of disruption, it is very, very simple. Now, it doesn't eliminate the 2 rules concept. The 2 rules concept is exactly the same, right? So what we have is, so this is coming into previous structure. So I started my session at 7 o'clock, as you know. If we look at previous price, so we were stuck into this range, right? And we were looking to trade a bullish move. So the idea was we had this form of disruption here. So this is basically what we would consider an LG, but it's only considered an LG once it's taken out that structural high, right? Now, in this case, we are essentially trading the assumption that we are trading liquidity grabs. That's the assumption. However, we still need to have strict rules because we can't be trading based on assumptions. We need to be trading with our rules that are backed by statistics. Okay, that's how you gain the confidence. So once price actually broke that structure, so I didn't even look to confirm this at the moment. So what I would have done normally is I would have marked this POI out. Once price come here, I would look for my confirmation, and then I would have looked for my inception within there, right? And continued. So anyway, so once the structure was taken out, I went into my lower time frame, and this is when I went to the 15 second. I could have done the 10 second to be fair. I just chose the 15 because I'm more comfortable. I haven't played too much on the 10 second at the moment, but yeah, that's how I went on. So I went on 15 second purely for comfort, and the first thing we see is that we got a low and a high. I think in hindsight, I probably would have went to the 10 second only if there was no form of breaker structure here, right? I would have tried to find a breaker structure as soon as possible. That's just my way of thinking. So we've got the low and we've got the high. We've got this breaker structure. Now we've got this breaker structure and we go on to form this high. Prices are already pulling back in this case. Now, in theory, not in theory, ideally we should be waiting for some sort of pullback and some sort of breaker structure, right? Not breaker structure, some sort of candle break before we start looking. So in terms of the price pulling back here, this does make it somewhat higher risk, but because price has already broken structure and is already pulling back with that huge wick, it's kind of a bit of a sticky one, to be fair. But in terms of when the confirmation actually started happening, it started happening when this pullback actually was confirmed, when this candle was actually taken out. If you're confused by that, then you should be going over the structure videos again, right? Okay, so once this happened, we obviously mark out our POI. Our POI is here. Okay, and our prices obviously come in. Now, the idea about disruption is the fact that it should allow us to go straight to the 1 second without having to do a confirmation and inception, so we can catch trade at the earliest point possible. So once price started to come in, right? So what we need to wait for is that was the previous low that was formed. Nothing came to break this high. We go on and we form a new low. So this candle forms a low and a high in itself. So what we have is we have this low formed, which is created from this high. Oops, where's it gone? There we go. And then we form to have this breaker structure from this range. So we have intent. And then we have our successful retrace. So what we have here is, I shouldn't need to be explaining this, to be fair, but we've got intent, successful retrace. Now, usually what we'll do, we will look for an entry point. We'll place an entry either here or an entry point here, right? That's our usual play. However, what we need to have is a disruption of structure, of some sort of structure. So what we have is here, the SR was taken out. As soon as the successful retrace was taken out, that is when I'm looking for an entry. So what we have is, I think the candle structure looks a little bit different from how I actually traded it. But anyway, what we have is low, high, and I am happy to take the trade as soon as price kicked in. So I took the trade from the range from here to here as the actual entry point. Obviously, the high probability trade would have been when we have this range and then we have the SR. Once the SR was created, we can take the trade off this POI here. That would have been higher probability, but it's completely up to you in terms of how you want to enter that. So essentially how it works is we want to have some sort of disruption, and then we want to be entering off there. But again, say we have our confirmation 2 rules, right? So that's rule. Say that's rule 1. That is rule 2. We want to have some sort of disruption, right? And I'm going to do it in this before we look to enter. So we need to have a structural or order flow disruption. What I mean by order flow disruption is if we were to get this, for example. We would have breaker structure, there we go, mitigation, then we have mitigation, Obviously, this obviously created order flow. If we have this order flow disruption, to be fair, I wouldn't worry too much at the moment about this. I'm still trying to understand which one works better and which one is more successful, obviously. But if we have this is order flow disruption, is these ones work a bit better purely because the understanding is that we have invalidation points. When we have mitigation, right, we have invalidation points. Now, the idea about invalidation points, it gives us points where we have safe stop losses, but even then, sometimes price wicks out sometimes and then it comes back in. The idea is that we are able to trade this because we're waiting for that form of disruption to happen before we're even thinking about entering a trade. Now, it's this process of waiting for that disruption that is the reason why this happens less frequently. Because the rules and how order flow and how order blocks actually work is that the process of mitigation happens so frequently, normally, without the liquidity grab anyway. The idea of trading the process with disruption is that it allows us to trade higher probability because we're thinking it's the logical idea of liquidity being taken before we enter a trade. But that's not the idea that I want to go forward with, purely because I highly doubt that, as I said before, I highly doubt that institutions are looking to take out these second structured lows and highs. The idea that how price works, right, we have some sort of compression, right, in price. Accumulation, whatever you want to call it. Essentially, this is the interaction between buyers and sellers, buyers and sellers, buyers, sellers, buyers, sellers. No one's winning in this case in terms of no one has more strength. But eventually, what happens is that we tend to have some sort of push, and then we have a break outside that range. And the idea is that we are looking at who is in control of the market at that point. Are they buyers or are they sellers? And then at this point, the buyers had more control over the sellers, and the idea that price needs to come back and trade at this price because this was the ideal price to buy from, okay, in terms of as opposed to selling. That's the whole idea with the market cycle. Essentially, what we have is how the market actually moves is that we have some sort of compression. Then we have a breakout of a range, either with or without a liquidity grab, and then price continues to follow. And then what we have is price will continue to follow. Then we have some sort of a compression again. Now it either continues or it decides to fail. Now this can be seen as the Wyckoff theory, which is essentially how it's been developed. Now, I don't want to bore you with too much details, and this may even start confusing you. But I'm trying to give you an idea that where the thought process is coming from. Obviously, once I've eventually perfected this, and once I'm able to say that I'm confidently going to start using this from now on, obviously I will teach this far better than I am now. But this is to give you an insight in my thought process with how I develop a new model and what goes into the testing phase. But that's essentially it. Essentially, you are waiting for, and this is how I want you guys to think it from a rule-based perspective. There we go here. So from a rule-based perspective and as a mechanical trader, the best way to think about this and the simplest way is that we need structure to fail, okay, which is done. And then we are trading the assumption that this is an LG. When we look to confirm, again, we need structure to fail before we look to enter. And you can enter at entry point 1 or 2. The two scenarios that we have, right, which I posted here, two scenarios that we have is that scenario 2, let's start with scenario 1, where the IMOB is taken out and then we look to enter. Scenario 2 is when we had the IM and the SR. We can trade when the SR has been taken out and then we look to enter. If there could be another scenario where I haven't seen it, to be honest, at the moment, but we could have a scenario where the SR and the IM is taken out and then we can look to enter. But I haven't seen that frequently yet, so I don't want to dive into that just yet. I need to make sure that actually does happen and how we need to react at that point. So bear with me on that scenario. But this is the generic scenario that I've noticed over my testing. But for now, I'll leave you guys be. I hope you guys enjoy this video. I hope this is insightful for you, and hopefully it inspires you to do some testing yourself and try and see where your losses are and see how you can use the rules in your favor to develop even a better model than I have, for example. Because it's possible, because everyone has different interpretations. I'm not saying my interpretation is perfect, because it's not. You know, some of you can have better ideas, far better ideas than me. It all depends. But I will leave you guys be. I hope you guys enjoy the rest of your Sunday. I hope I post this tonight. I should post it tonight. And I hope you guys have a great trading week.